Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spotted. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. The 30th. Yesterday, another crazy all over the place day. Gotta come over to the charts immediately. Volume profile. E-mini. Look at that. So there's that huge ramp up on Friday and overnight, and then the beginning bit of trade, they just erased all of that. But then after Europe close, nothing but up. So again, we continue to have this thing where it's like the Europeans bearish, but it goes up. And another thing that I want to note, I'm not sure if I can still see it over here. Yeah, I think we're okay. So when you come over here and you look at yesterday's action, so this short period of time between the lines for Monday, you can see. So here's the first little bit of down action, and then around 10 o'clock, 10:30, they kind of bounced and it was higher from there, right? Kind of bounced off of an area of low liquidity, by the way. But look at the cumulative delta. Look at the cumulative delta down here on the bottom. Should I highlight that for you? So we're talking about this area right here. Look at the cumulative delta. So even though we were moving up big time, cumulative delta was down all day. Now, this happens all the time. This is why I tell people, like, I wouldn't just trade off of which direction the cumulative delta is going, because it will flip on you. But my theory in this instance, because a couple of different things could cause this, but we have all of these month-end flows coming in, and there was a lot of people saying that there would be selling because they have to rebalance, but there would also be buying because of the gamma, and that gamma buying would actually be stronger. So I think what may be happening is the people that are waiting for month-end to rebalance are waiting, and we might not see them get into it and do it until tomorrow, because tomorrow's a Wednesday. Last day of the month, and it's a Wednesday. There tends to be more trade on Wednesdays. So I think that some of those rebalancers might be waiting, and the reason you're seeing this move up on very little cumulative delta is because the futures are basically chasing, because what's really moving it up is options. It makes sense. So it's just one theory, but I think it's a pretty strong possibility given the context, right? Now, when we come over here into treasuries, yesterday the interest rates just got, I was really shocked because we were expecting to be some buying in the bonds here going into month end, and a lot of people thought that we were going to get a really good reprieve. It came back a little bit last week, but that wasn't really a whole lot. Yesterday, it just took a real dump on us. Probably some people just selling to get rid of assets. Could be maybe some more knockoff effects from this huge this huge private fund that got margin called, Archegios. But then in the overnight session here today, they are just absolutely decimated, and new lows in the 10-year. Not in the 30-year, but in the 10-year, yes. And in the 5-year, yes. Also, quite a bit of steepening in the 2s and 10s. And not so much in the 10 and 30s. So it does appear, once again, that the shorter end of the curve is being more indicative here, right? Anyways, we come over to oil. I shouldn't say that the shorter end of the curve is more indicative, but there's something going on there in the curve where it's causing it to steepen quite a bit. Right. Which one were we looking at there? Here's the 10, 30, 10. Was I looking at ZF or is it? Oh yeah, it was. Okay, ZF is the one that just got creamed. All right, ZN, there's the 2s and 10s. Oil has kind of been back and forth. I think because, of this Suez Canal blockage and everything. But that's all over now. And you saw oil take a little bit of a dip when that happened. And then now they're back up. And then in the overnight, they've come back down. So I'm not quite sure what's going on in oil. It's just kind of all over the place. Gold and silver, as the treasuries get demolished, once again, just decimated, just getting slaughtered. So they're not to March lows yet, but they're headed that direction. Silver has been on much more of a downturn and has just been absolutely terrible. Oh, there was this point in January where they were a little bit lower, but this whole thing is just, I don't know. So here, one thing would be that there continues to be a correlation with the treasuries. I think at some point that correlation is going to have to break. But there might also be that this fund maybe owned some gold and silver, maybe. I don't know. But that just kind of looks like people dumping unprofitable positions to me. So the gold and silver thing still not working so well. I'm kind of waiting. I know at some point that I think at some point you're going to get that inflation come in and people are going to buy gold and silver. And I'm just kind of keeping an eye on it and waiting for the opportunity to buy that. But it's just not happening. Okay. So over here in the treasuries already, we're getting some interesting action at 31.5. Some significant selling, but bids holding it for now. And let's see here. We do have, we have average weekly earnings at the bottom of right now, actually. Good grief. Hello, Pierre. How are you doing? Let's pull up the text-to-speech here. Do all of that. Did I start a little bit later than normal? It's not. I'm usually done before 6:30, but there is Redbook and house prices, Fed's Coral Speech, Case Shiller House Price Index, consumer confidence at 10 Eastern Time. Some bill auctions, a lot of Fed speakers today, though. That's interesting. Okay. Let's see. What else do we have later in the week? Because do we get non-farms this week? I think we should, right? It's always the first Friday. Yep, we do. We get non-farms on Friday. But I'm interested Wednesday, ADP non-farm employment change, Chicago PMI. Then Thursday, ISM manufacturing PMIs. And the Challenger job cuts. Okay, so today, it looks like from a news perspective that there's not a lot of reason. You sound like Steve. Who is Steve? Or should we pretend that we don't know Steve, or should we pretend that we're friends with Steve? I mean, I feel like I shouldn't be associated with a scumbag like Steve. So I'm going to say that I don't know who Steve is. Steve. So did you guys see? I posted that on TikTok. And it did pretty okay. So I already know what I'm going to do today. So if you haven't followed... You meant the accent. I'm still working on the accent. So one of the things that I'm learning is that like people in New York kind of drop Oz, right? Well, people in Utah kind of drop T's. So if you end up dropping both T's and R's, you just kind of sound like you can't speak. So I'm working on that. Anyways, I know what I'm going to do for today with Steve. So if you're not watching, if you haven't gone and found the real stock market Steve on TikTok, you should go and check that out and go follow him. Stocks crushed by Archegios blow up, start announcing buybacks with a spike in the pre-market. Cool. Oh, CME Group to launch micro Bitcoin futures on May 3rd. Cool. That would still probably be like too hard to trade, right? When you think, wait, okay, let's research here. Micro Bitcoin futures. So they will be 1/10 the size of Bitcoin, and that means that you will be able to trade them for $5,000 a contract. Gotcha. Still not. I still can't. I don't think the Ace is here, but I think that you kind of already missed a short if you wanted to go short. So I would say that if Ace was here and he was trading it, that he would maybe have FOMO'd in at 39.45. What about CL Micro? That would be more interesting. So my they've been pushing for it. I don't know why it hasn't happened, to be honest. Here's the thing that I find interesting. So there was a thread about this on Futures.io the other day. So the more that you move, the less liquidity that you're going to have at each individual price, right? So the 10-year treasury doesn't move very much. And because of that, it's able to hold, 2,000 to 3,000 contracts per price. And that's actually historically maybe a little on the lighter side. I'd say historically we're 3,500, right? Now the E-mini used to also be thick. The E-mini used to have like 500 contracts at each price. When I first started, it was slow. And like when it moved, it would just be like one tick all at once, and then it would sit there forever. And it didn't move around like this all the time. Not at all. Now, some of it is that the volatility index is still elevated. I think that some people are waiting for the VIX to take another drop. So if the VIX takes another drop and goes back into its historical norm, I think that there could be some buying off of that. And there seems to be some people waiting on that one, right? So when that happens, we will probably see the S&P 500 stop moving so much. But it's going to have to happen after the month end. Maybe going into the summer, maybe we'll start to do that. But there's another factor, and that is that when we were looking at the E-mini before and it was behaving like that, we were like at ES 2000, right? We're like twice as high now. And when you're twice as high, you're still going to get like a big move on a good day is going to be like a 1% move. But a 1% move at 4,000 is twice as many ticks as it is at 2,000, right? So overall, the liquidity in the E-mini is less than it was. Now you tend to have maybe 100 contracts at a price, maybe 200. You're not anywhere near the liquidity that you used to have. Now there was this intention that like the NASDAQ was the one that moved around a lot. And if you wanted a small tick instrument, you went to the NASDAQ. And if you wanted a large tick instrument, you went to the S&P 500. But now it's like, if you want to trade equity indexes and you want a large tick instrument, you can't do it, So I'm kind of wondering, is there going to be a point at which the CME is basically going to have to create micro everythings just because everything has moved up so much in price that there's not enough, they're not able to pull in enough noise traders? Because this is really what it comes down to, right? Correct. IES sometimes acts like the NQ is super volatile. Yeah. So in order for a market to work, you have to have a certain amount of just like noise going around, right? And is there going to be a point where it gets so big that the liquidity is just terrible? And what would they do at that point? Because you got two choices. You can either make micros, You can make micros, you want to pull more people in the market, but that doesn't deal with the issue that like it's moving like 20 ticks at a time. And how do you deal? Because honestly, in the NASDAQ, it's getting crazy over there. How can you possibly trade that, right? Or the other possibility is that they could change the tick size. Like they could say that 1 tick is a full point instead of quarters of a point. Do you think that they would do that? Because it seems to me like something that they would not do. But, I mean, man, if the stock market keeps moving like the way that it is, that'll be a problem in a couple of years, don't you think? So it's interesting to think about. So that's interesting that Brandon didn't take a short until there. Because they're kind of at the oversold area for the whole session. Well, with the way that the volume traded in there, I don't think that I have a super great spot to try and take a trade, even though I do think we might have a possibility of a bounce, or maybe we could try and take it short. I don't know. So one of the things I find interesting here is that the E-mini has done okay, right? Even though there has been a lot of chaos out there from this margin call. Oh, really? They did it in the DAX this year. It moved in half points, and they changed it to full points in the DAX. Well, that's interesting. It's not like they don't ever change things, but it seems to me like the CME is reluctant to change the structure of any one market. You know, like it's going to affect that market, and I'm sure that there are traders that are like, oh, if you do that, I won't be able to make money anymore. It'll change the whole thing. And March payrolls a whisper of 1 million. Oh man. Isn't this like, there's been like whispers from Zero Hedge about every non-farms, isn't there? Biden warns of fourth wave, more fallout from Archegios, and the Suez bill comes due. Here's what's moving markets, says Bloomberg. They still think that Archegios is a thing going on, huh? Well, at the moment, the thing that I find the most interesting is that the dollar is up, yields are up, and gold and silver are getting absolutely pummeled. I do not remember this happening after the 2008 crisis. I remember there being plenty of times where it was like, gold should be going down, and it just kept going up and up and up and up. And everybody said, nah, this ain't gonna last. And then, you know, eventually the gold bugs did get tired of it and left. Is it because, though, that last time around they all decided, oh, we were wrong and we're never going to make that mistake again? What Jim Iorio says, I've been gathering data for a year and a half, and there's one thing I'm 100% certain of. We need to bring back dodgeball in gym class. What? That one never made sense, because at my school, we never played straight dodgeball. It was always like Dr. Ball, where there was one person that could revive you if you got hit. That was our favorite thing. Everybody loved that. And the funny thing is that it was usually the quieter, less athletic kids that ended up being the last on their team to get hit out. I don't know. So the whole dodgeball trope never made sense to me in movies. Yeah, that's what we're talking about. Well, so there was a pretty good excursion on the downside, and it came back up pretty quickly. Overall, the pressure in the treasury seems to be on the long side. So I don't know. Namely, the people who acquire COVID are, what's Nate Silver saying here? Let's start from the beginning. I suppose it could be true that the risk of dying from blood clots from the Arizona vaccine, while very low, is enough to compete with the risk of acquiring and dying from COVID for young, healthy people, which is also low. But that leaves something big out, namely that people who acquired COVID are transmitting it on average to 1.1 other people in Canada right now, and there's no guarantee that the persons you'll transmit to will also be young and healthy. Ah, yes, sure. So what do you think about virus XIX? Because they were hiding in the back. Yeah, that's exactly what it is. They hide in the back, and they get good at dodging it, though. That's the thing that's funny. Is because they end up in the game longer, they get better at hiding. I don't know. Because I always remember there'd always be that one really scrawny, wiry kid that just was able to dodge everything. So this whole thing about the Biden administration warning of a fourth wave. Here's where I'm trying to sort things out, and it's going to be interesting to see how it's turned out. In the past, I think that we've been okay. I wouldn't say that we've been right in every instance about predicting the next leg of this thing, but we've done okay. And one of the things that we did, or that we knew about, that apparently the market still doesn't know. The market still doesn't know this, but as far as I can tell. Okay. But we had this last year around when we were looking for a second, when there was wondering if the wave was over or there was a second wave, and if reducing the restrictions would result in a second wave and all of that. And everybody said, okay, well, we wait 2 to 4 weeks. And after 2 to 4 weeks, you will have seen the people that got infected from the initial round of infections caused by the easing of restrictions, and then we'll know if people are, if there's going to be another wave, right? And that came and went, and nothing happened, and so a lot of people assumed that there wasn't going to be anything, right? Well, Bank of America had put out a report that I thought was really, really good. And the thing that they had pointed out at the time was that the R factor, which is how much it is being spread to other people. So let's say that at the current time, the R factor is less than 1. So if it's over 1, then that means that you'll have an increase in cases, right? Now, herd immunity will reduce that R factor and possibly keep it under 1. That's the whole idea of herd immunity, is that R factor gets under 1 and you don't get as many new cases, right? Yeah, this is a pretty strong take from 31.00 to 31.01 in the 10-year. You think that the treasuries are going to back off today? It looks like that at the very least that the some of that selling might be over and that they're bouncing a little bit. Anyways, the Bank of America pointed out that it takes something like 2 weeks just for the R factor to normalize and come back up. So what happens is you'll have the 2 to 4 weeks, and then for the R factor to go up. And then once the R factor goes up past 1, and then you have another 2 to 4 weeks to see the infections, and you can look at the rate of the new curve and see what that wave is actually going to look like, right? And that's how we were able to predict how things would go over the summer, right? Well, in Texas, everybody's been saying, well, we've been closed for like what? It's been like 3 weeks now? And they're like, nothing's happening in Texas. It must be okay. No. 8 weeks. 8 weeks after, if the number of cases in Texas is still flatlined, then we know that they're okay. But at the end of 8 weeks, it could be rising. And for some reason, the Biden administration seems convinced that there's going to be another wave. Perhaps that is because they are getting a fourth wave in Europe. Europe is awfully concerned about all this stuff. I don't know. Or we could make all these conspiracy theories about why they're doing it because they just want government power and everything. But when they've come out and they say that they're concerned about another wave, I haven't really seen them present the evidence to explain to me why they think that that's going to happen. Okay, what's Zero Hedge tweeting here? More volatility coming. The S&P Gamma remains positive, but Gamma and QQQ and IWM remains sharply negative. We're on an 8th wave here going on 12. I don't know, man. Because it's just been, like I've been saying for a while now, I feel like we should be over it. Theoretically, in Utah, we are to herd immunity. So how do you feel about vaccine passports? Well, infinity COVID, it's never going away. It sure starting to feel like that. Oh my gosh, that reminds me, before we go into this. So before we go into vaccine passports, did you guys read the statement from Donald Trump yesterday? Oh, man. I think a lot of people missed it because I haven't really seen it reported. Wait, if I go to the CNBC homepage, do I see, do they talking about it? Crypto investor who bought people's non-fungible token for $69 million says he would have paid even more. Yeah, I don't see anything about it. Okay. Here's the statement from Donald Trump. Based on their interviews, I felt it was time to speak up about Dr. Fauci and Dr. Birx, two self-promoters trying to reinvent history to cover for their bad instincts and faulty recommendations, which I fortunately almost always overturned. They had bad policy decisions that would have left our country open to China and others, closed to reopening our economy, and years away from an approved vaccine, putting millions of lives at risk. We developed American vaccines by an American president in record time, 9 months, which is saving the entire world. We brought billions of dollars of these vaccines on a calculated bet that they would work. Perhaps the most important bet in the history of the world. Dr. Fauci and Dr. Birx moved far too slowly, and if it were up to them, we'd currently be locked in our basements as our country suffered through a financial depression. Families and children in particular would be suffering the mental strains of this disaster like never before. In a fake interview last night, it was a fake interview, guys. This whole thing is all Trump for sure, right? In a fake interview last night on CNN, Dr. Fauci, who said he was an athlete in college but couldn't throw a baseball even close to home plate, it was a roller, tried to take credit for the vaccine when in fact he said it would take 3 to 5 years and probably longer to have it approved. Dr. Fauci was incapable of pressing the FDA to move it through faster. I was the one to get it done, and even the fake news media knows and reports this. Dr. Fauci is the king of flip-flops and moving the goalposts to make himself look as good as possible. He fought me so hard because he wanted to keep our country open to countries like China. I closed it against his strong recommendation, which saved many lives. Dr. Fauci also said we didn't need to wear masks. Then a few months later, he said we needed to wear masks, and now 2 or 3 of them. Fauci spent U.S. money on the Wuhan lab in China, and now we know how that worked out. Dr. Birx is a proven liar with very little credibility left. Many of her recommendations were viewed as quote-unquote pseudoscience, and Dr. Fauci would always talk negatively about her and, in fact, would ask not to be in the same room with her. States who followed her lead, like California, had worse outcomes on COVID and ruined the lives of countless children because they couldn't go to school, ruined many businesses and an untold number of Americans who were killed by the lockdowns themselves. Dr. Birx was a terrible medical advisor, which is why I seldom followed her advice. Her motto should be, do as I say, not as I do. Who can forget when Dr. Birx gave a huge mandate to the people of our nation not to travel, and then traveled a great distance to see her family for Thanksgiving, only to have them call the police and turn her in. She then, embarrassingly for her, resigned. Finally, Dr. Birx says She can't hear very well, but I can. There was no quote-unquote very difficult phone call other than Dr. Birx's policies that would have had led us directly into a COVID-caused depression. She was a very negative voice who didn't have the right answers. Time has proven me correct. I only kept Dr. Fauci and Dr. Birx on because they worked for the U.S. government for so long, like they are a bad habit. And that is his statement. So, I mean, I'm kind of sitting here like, okay, so if that's what you thought, why didn't you just say it back then? Because you knew that the public was already in favor of them. And I don't know. I guess if he had gone that hard back then, it probably would have hurt him. But I was just like, whoa. Because it said, there was a point. I was like, okay, I don't get why everybody's all focused on this Fauci guy, but let's see what he says. And then he would start changing things that he said. And you remember here on the stream that point when I was like, oh, I've had it with this guy. He's full of crap, right? Because he'll like move the goalposts and change what he says on things. Like the whole thing about the masks is probably the worst and most popular example, but He's done it on so many other things. And he says so many things that are just like outright retarded. Like, if you have the vaccine, you still need to use a mask and all of these things because you still might catch it and spread it. And it's like, okay, yeah, but in all of the studies, there's been like 2 people that have been reinfected after the vaccine. So there's like no empirical evidence to back up the suggestion that would happen. The whole thing is just ridiculous. And now you got the Biden administration. Remember when everybody said, after the election, suddenly COVID just will magically not be a thing? Well, I never really bought into that narrative. And now you see, okay, so here comes the red book, right? Masks and distancing, 2 things that have varied or been tweaked through the entire pandemic. Masks either do what they do for mitigating the spread of a respiratory virus, or they don't. That doesn't change mid-game. Yeah, well, hold on a second. Oh, okay, I'm listening to the news squawk. I'm like, why is he talking? It's because there's another piece of news here at the top of the hour. Fed's Quarles is going to be speaking, though. I think that's going to be the more important market mover. E-mini, yeah, I mean, a little bit up, but it's not very awe-inspiring, is it? Anyways, the thing that bothers me is like, where is the empirical evidence that it has been effective? I haven't seen it. In fact, the studies that I've read that have been pointed out to me, and I should admit that in this instance, this is a place where I haven't seen everything. But in the studies that I've seen, I haven't seen any evidence that they are effective. Masks help keep people that spit when they talk from spitting on you. That's about the most help you get from those masks. I don't get it. And then there's the conspiracy theory side of it, where they're like, the masks are there to control you and all of this stuff. And like it has very negative effects on kids. But I still just don't get, like, why would they want to do that, This just doesn't make sense. What they would gain from forcing everybody to wear masks. But then it's like, it doesn't seem to actually help. If anything, the mask keeps it in your mind, right? Because if it wasn't for the masks, I would have completely forgotten that there was a pandemic by now. And the only reason I'm reminded by it is because every time I go to the store, you have to put this stupid mask on. Which I'm not saying that I know that it doesn't work or anything. I'm just saying I don't like wearing it. It's uncomfortable. Maybe it's my experience, but it's blatantly obvious to me that last year has been a military saw breakdown period, preparing us to be built back up as something different. Well, there is admitted there have been people on the globalist kind of side of things kind of admitting that they want to try and use the pandemic to restyle the world economy and stuff. That's a proven thing. I wouldn't call it a conspiracy theory so much as it is just like people trying to take advantage of the situation, you know? I wouldn't think that if the standards hadn't oscillated so much. Well, so here's one that bothers me the most. And this is kind of where this was leading to. The housing eviction moratorium has been extended again. How many times have we been sitting here thinking, oh man, when this moratorium expires, what is the market's going to do? And kind of holding off on getting too bullish because we're still concerned about what the effect is going to be when all of these landlords kick people out that haven't been paying, and the rent becomes due and nobody's able to pay it, and all of these houses go default and all that stuff. Right? There's some real concern out there. Of course, we don't know what's going to happen, and maybe it's not so bad, but there's some real concern out there about ending the housing moratorium. Well, apparently unemployment is still high. So you can't bring it back. I don't know. Like, I just can't imagine. There's people, what are they doing all day for a year? Man. Uneducated Economist had a good video about how the companies won't kick people out. They'll just refinance those people at higher rates. Well, that sounds reasonable to me. Okay, here comes the number. Hold on a second. Let's see if they react to this one. Okay, so not much of a movement off that. 3 years, as Uzi says, 3 years ago, telling someone they'd need papers to get into a grocery store would have shocked the hell out of them. Today, people call the cops on people hugging in public. It doesn't surprise me at all that it's happening in New York. Now, if it starts happening nationwide, then I'm concerned, but it doesn't surprise me in the least bit that it's happening in New York. Those guys have been doing this kind of crap for decades now, man. You just go back to after 9/11. They've done all sorts of things. The thing that's kind of disconcerting about a lot of those sorts of things is that a lot of that has worked in New York. Like in New York, they started to say, we're going to have a strong police presence everywhere, and especially in areas with high crime. We're just going to put the police where the crime actually is occurring. And it reduced crime. It did. But they were like profiling and like stop and frisk and all that sort of stuff. Like stop and frisk, I don't think that that's constitutional. That was like a kind of a compromise for safety. But you know what? It worked. And people are totally okay with going along with that in New York because you got to realize I don't think this is a weird thing, because we always say, I think it's a very common narrative that people in cities don't understand what it is like for the people in the rural areas, especially the rural areas that have been hit hard by globalism, right, and are dying out. And these guys, especially the Silicon Valley kinds of people that are just pushing the globalism, don't really understand the implications of what they're pushing for, you know? Well, one of the issues that I think the conservative movement has is that they don't know what it's like to live in a big city. And so they're not able to put themselves in the mindset of the liberal mindset and understand why liberals are doing the things that they're doing to be able to make effective, convincing arguments against it and to get them out of it. So when you live in New York, the government is everywhere. You can't go anywhere without seeing the impact of the government in your life, right? You go to work on the subway. Everybody uses the subway. You can't get anywhere without this government, although it's kind of funny because that was originally started by private companies. But I digress. All of the infrastructure around there, police are everywhere. The place is like freaking Disneyland because of the police. My understanding is that now under de Blasio, that they have changed some of those policies and that crime is going back up again very quickly. But when I was there, it was like freaking Disneyland because of what Rudy Giuliani had done, right? You could not go anywhere without seeing the impact of government in people's lives. And frankly, positive impacts of government on people's lives, right? So, yeah, it doesn't surprise me in the least bit that people in New York would say, okay, the government is trying to keep us safe by preventing these anti-vaccine people from infecting us, and they're totally okay with it. Not surprising to me in the least bit. I think vaccine passports for international travel are fine. Those have always existed. Vaccine passports to go into 7-Eleven, that freaks me out. That shit's retarded. Well, so my understanding of it is that the vaccine passports are being used for non-essential functions. So it's like you can go to a baseball game, but you have to have been vaccinated. Now, there are some places that it's just like any business might want to enforce a vaccine passport. But when I hear about grocery stores, what I'm hearing is that they would have separate times for vaccinated and unvaccinated people to be able to go to the store, and not that they would prevent you from going in altogether. But I still say it's retarded. People woke up to New York City going to crap back when Rick Moranis was randomly attacked on the street. I don't know. I haven't been to New York in a long time, but what I hear on the internet about what has happened to us since the pandemic makes me very sad because I liked that city. For all of its problems, I liked it. Anyways, but I'm just surprised. Going back to what I was saying earlier, I'm sitting here like, when is this moratorium going to end for eviction moratoriums? You know what I mean? And I'm starting to be like, okay, at what point is Bernie Sanders and Alexandria Ocasio-Cortez kind of come out and say that the government should just confiscate all of those properties and give free housing to people, or to just make the eviction moratorium permanent, right? Like, you know that that's where it's headed. Doesn't mean that they will be able to do it, but that's what they're going to push for. That's what Uzi says. That's what's going to happen. I totally get refinancing it at different rates makes a lot of sense. You know what though? I don't think that it's going to be all sunshine and rainbows though, because there is going to be a lot of people that are landlords right now that they were doing it because, you know, everybody says that the way to really make money is in real estate. And, you know, oh, I can manage this one property. And after this whole thing, it's basically going to be like, I want nothing to do with it anymore. There will be people that will say, I don't want to be a landlord anymore because of that experience. So I do think that it's going to increase supply in the housing market. I don't think that it will be like some disastrous event, or probably not even something that will really affect the economy a lot. But we'll see. I mean, I think that there's still potential for it to become a big deal, right? We're just shifting the Overton window during Trump. Progressives whine about conditions at the border. During Biden, Trumpists are whining about conditions on the border. Well, I think that there's kind of different. I don't think that Donald Trump supporters were okay with the way that the border facilities were, right? The fact of the matter is that the facilities cannot handle the influx of people, and there's probably nothing you could ever do in those facilities to make them better. You'd never be able to fix the problem, right? And with Donald Trump, it was kind of like this thing that they were stuck with. That they weren't okay with it, but it was like there's only so much you can do. There's an influx of people. You're trying to stop that influx of people. There's these facilities that aren't adequate. The best you can do is implement your policies, let that wave fade, and then prevent another fade from another flood from ever happening, so that the conditions on the border can remain humane, right? And then what does Biden come in and do? He does the exact opposite of what they've been doing. It ruins all of the policies that were frankly working, and then turning around and acting all surprised and trying to blame Trump when thousands of people try to come over the border, right? And then on top of that, during a pandemic is the first thing. That's the first difference. Right. And then number two, not even allowing the media in to see what's going on. So I think that the criticism from Biden is completely fair, and it's not hypocritical. Because anybody with half a brain would know that if people that want to immigrate to the United States know that they can basically cross the border and the government is just going to let them stay, then of course they're going to come. Of course they're going to come. And it goes back to the thing that we have always been saying at the beginning, which is that the humane thing to do is to keep the policies in place that deters them from coming. I got to tell you, this thing, let's see here. It's not that they were okay with it. Is that they were silent on it, which resulted in a flood to the border, which in turn forced the right to complain about the conditions on the border openly. I don't. Let me tell you something about the world that I've learned, applicable to what you do, that people don't want to hear, that will be extremely unpopular. If I dare say, probably one of the most unpopular things that I can tell you. But there is a wealth of anecdotal evidence that suggests this is true. Sometimes you have to be bad. Sometimes you have to be bad. When Moses was leading the 12 tribes of Israel through the wilderness, and I use this example because the kind of person that tends to not believe that this is true tends to be the religious person that says, oh, we need to be nice to everybody all of the time and you shouldn't ever be mean to people. No. Okay, when Moses was leading people through the desert, it was like you broke the rules. Oh, you two are fornicating? Spear through both of you. That was Moses, guys. This was Moses. If you were one of the 12 tribes of Israel wandering the desert, I think you would be terrified of Moses. No? Don't you think you would be terrified of Moses? But that's the thing, is that sometimes force and being mean has to be used, and it's for the greater good. It happens. And so, yeah, is it mean to not allow everybody into the country that wants to come? Yeah, but you know what? It is for everybody's good in the long run. The people in the United States do not benefit from the population increasing so quickly, okay? Especially when unemployment is down, okay? And the people that are coming across don't benefit from, having their lives put unnecessarily in danger. You're creating a perverse incentive that incentivizes people to do something dangerous. The rule should be Exactly what Donald Trump put in place. If you want to come and claim asylum, fine, you can come and wait in a facility in Mexico until your claim has been processed. And that will deter people from making false claims. And Biden rescinding that order is the most brain dead, stupid thing I have ever heard in all of public policy. And we all warned that this was the first thing that was going to happen if Joe Biden won the election. And we've been warning about it for well over a year now, since he's been talking about it while it was the election. And then we warned when he won the election, and now it's happening, and it's going to get a lot worse. It's going to get a lot worse. And how that affects the politics, it's going to be really interesting. Yeah, I saw a video where Ted Cruz visited one of the processing centers and was shut down by a government operative. Yeah, I can't believe. One guy worked on the Sabbath and was killed. Other people were banished to live outside the camp. Yeah, it was the 12 tribes. Yeah. I just thought, where I learned this was from a book about 50 Cent called The 50th Law. And if there's anything that I remember about that, it was that sometimes you have to be mean. And that was a point at which I kind of realized that sometimes your responsibility as a leader or as somebody that is, trying to accomplish things, you will have to do things that you don't necessarily want to do, but are for everybody's good. That's why when it comes to moderating this chat, if people it's not nice to be like, oh, this person made one mistake and said something stupid and we ban them from chat. But you know what? We wouldn't have the community that we do if I didn't follow that policy. And all the time I sit and I think about, oh yeah, but wouldn't we have more people if we were nicer to people and everything? But I always go back to what is the goal that we're trying to accomplish and everything. And I know that the policy that we're doing accomplishes our goals the best. And so I, no regrets. You know what I mean? Human trafficking, people going to pay to get transported and won't be good. Well, they've already been saying that the human traffickers have been making millions and millions of dollars. The whole thing is just a big mess. Patrick Rooney says dollar strength is the albatross of a commodity supercycle. It really is. It's interesting to see here the dollar continuing to be stubborn, because I keep thinking, okay, this is going to blow over and then the dollar is going to weaken again and it'll be really strong going down. And we've had hints of that, and then it goes back up again. I'm like, what? So looking at, I'm kind of looking at all of the different correlations here in the market. E-mini has bounced a little bit. Oil and gold have bounced a little bit now. All of the currencies really bouncing as the dollar comes just down a little bit. Treasuries have kind of been back and forth, but ultimately rising here, but not beyond where they were before the regular session started. So difficult for me to come through with any real strong directional bias, especially in the E-mini. I think that people are still unsure about if there's more Archegios knockoff effects to come through. But some of these stocks that got really hammered by that are buying back shares and appear to be bouncing a little bit. You say you should be long. I don't know, man. It's just it's so tight. I've lately been questioning in the pre-market how effective, like if we had taken one at 7, then maybe, but we didn't really have a turn there, did we? But like it seems like the divergence is so small and the amount of volume in the market is so small that it's like not worth trying right now. Lately, you always question. Well, yeah, that's true too. You should go back and pull up the trade performance in NinjaTrader and just show us, or not us, but just show me how you've done with it over certain time period. Because I still think that the reason that you make money from it isn't the entry, if that makes sense. I think that it's how you're able to determine how to let it run that matters. And that when it doesn't run, you cut it off enough times. You could just rewatch these. Well, but that's anecdotal, Ace. That's anecdotal. You understand why that's not sufficient, right? Like because I traded it just straight the way that you explained it to me for a couple of months, and I had some success, and then I blew up when Brexit happened, right? So there's more to it than that. I honestly believe, if I'm honest with you, I believe that you don't actually understand where your edge comes from. There is something that you are doing that is really important, and that you didn't mention to me when you explained the setup to me, that has more edge and you don't realize it. And I believe that a lot of it has to do with how you manage runners. Because I would have a situation where I would get runners, but I didn't get them enough, and I didn't get enough out of them. Yes, it's called winging it. Yeah, I don't know. You did not take that at 45, did you? Oh, you went long 48.50. I'm just going to wait until it opens. Like, I even think I did. Well, did I? No, I don't think I did. We can pull it up really quickly, though. Strategy analyzer. Did I make one? Like, look, there's all of the different versions of the ACE strategy that I have. Oh, I don't have one that actually has time limitations on it. I was going to say, I wonder what happens if I just limit it to the 7 o'clock hour our time. And what the stats on that one are. Because when I do it on like a regular trade session, it's kind of like, So like, if I just do, like, let's do ace 3. I think that one is the most fair. 2 or 3. Oh, ace 2 has the armed threshold too? Because the thing is that most of the trades that you've been taking didn't match the threshold, so. Yeah, so you say it didn't run, so it filled. How do you know that it didn't run? I mean, it didn't come back down to your entry, right? So why did you actually take it off there? That's the thing that I can't explain. So if I just do a reward factor of 1 and a 2-point stop, and we're just going to use interest rate STH. And we'll come back and do back to 2016, I guess. Oops, E-mini, yes. Oh, you locked in one tick profit and it hit. Okay. That was probably a little bit too loud. Okay, but do you see what I'm talking about here? Like, okay, so the amounts of times that it works, 43%, 44% on the long side, basically random, right? It's basically random. Then if I start doing something like, okay, what if I just always try and let it run to the 2? Oh, I turned that off. Same difference, essentially. Right? The percent profitable doesn't change, but your profit factor is basically the same. And the amount that you make or lose is basically the same. I swear I turned the victory thing off. Oh, maybe I didn't click OK. Apply. Okay. Right? So like the first, and the other thing is you've got like, it's really equal risk reward, right? Well, I guess it kind of depends. But you don't move your stops on the other side, right? Like you come in, my understanding, my recollection is that here's the price that you get in at. And here you're going to have a target at 1 point and 2 points. And then over here on this side, you're going to have a stop at 2 points. Or maybe even 1 point. Depending on. More like 6-4? Oh, what do you mean? So where's the stop? Six tick profit, 4 tick stop. Right. Okay, so like let's go back here. Okay. We'll make the reward factor 1.5 and the stop be 4 ticks. Right. Well, the max drawdown on that was a lot less. Oops. This changed. There we go. But that was actually worse. So you see what I mean? So that was when I said, okay, so that's just like the cross and like all of the moving averages are like the directions that they should be, right? Doesn't. Now, if I just to say equal risk reward, just to say like, what is the percent chance that it goes there, right? So when you do it, you were saying, and it seems to me to be the case, that you'll get it 60% of the time or something like that, right? Well, the backtest says no. Now, the backtest is including the whole, it's the backtest is basically from 6:30 to 9:30 our time, right? Okay. I'm not sure if you are accounting for all the runners. Well, that's kind of my point. That's kind of my point, right? Is that if you go in and you trade this and you say, here's my entry, here's 4 ticks on this side, and then I take 4 ticks on this side and 8 to here. So I take that and I take that, right? So what I'm saying is that the chances that you get this is basically 45%, right? And the chances that you get this is basically 35%. So the math doesn't work out with that one. And then there was the whole, okay, if it comes and it goes up here, or if you enter here and it goes up and then it comes back, so you took a profit here and then it comes back, you break even, right? If it comes here and it doesn't quite make it to that line and it goes here, then you stop out, right? It says, but if you let your winners run, yeah, but that's the whole point is, okay. So so what we can do here, what we can do here is we can say, okay, actually, how could we can do it like this? I can do an optimization, okay? Reward factor, min, max, 10. Okay, and the stop, we're going to have be 4 and 8, okay? But that's not what happens. You can win 99 trades and make $1 and then lose one trade and lose 200. Your winning percent would be 99%, but you're broke, right? Okay, but that's not what we're trying to say. Okay, so if we come here to our optimization graph. Okay. So it's super hard to see it here. I'll do it like this. Okay. So now you can see. Okay, so this axis right here is the reward factor. Okay. So you can see here that the more you let it run, the more money you will make, yes. But it's not enough to get the strategy to profitable, right? Jesus NT8 does that? Yeah, it does. You just go if you do an optimization run, you come into in the display, you change it from summary to optimization graph, and then you set the parameters that you want it to look at. And it will show you this. I'm going to guess the max drawdowns in MFE and MAE are going to be like the same for everything. Okay. Yep. But we're just going to look at net profit. Okay. So what I'm saying is that this trade over here, when the reward factor is 1, doesn't necessarily work. And this trade up here, when the reward factor is really high, doesn't necessarily work. So if you have multiple contracts, and one tries to let them run and one doesn't, that still does not profitable strategy make. So you've got two things to sort out then at that point. One, I don't think, could be wrong, but I don't think that you have traded over the past 4 years almost 8,000 trades. So you're filtering it somehow in a way that you don't realize. And then number 2 is that you're letting them run in ways that sometimes you don't realize. If you're really making money over that whole time period. But I haven't looked at his results in a while, so. So the open of the E-mini has been relatively quiet. Anyways, so then I came in and I was like, okay, let's do this other stuff. So one of the things was like, okay, what if... Well, that was interesting. this off the screen for a second. Is it going to cross? Just tested the pre-market low. So some volume definitely came in there. You see all of the market selling came through, and it looks like some of the resting orders like just completely pulled. Kind of interesting. It looks like today we got E-mini or S&P 500 strength compared to the other indexes again. Yeah, Ace is going short. Okay. Yeah. So it's definitely stuck there. What the market order pressure from here is a little uncertain to me. Maybe slightly to the sell side. Okay. Anyways, what was I doing? Oh yeah, so then I made this one where I was like, okay, what about if it's like he hits its target for the day and then he's done, right? So I think that I did it like this. Equal risk reward. Hopefully he gets his win before his loss. Let's set this to the 4. 4. Okay. Is this still they're doing okay, like right there. So there, when you try and manage the trade, it's a little bit better, but it's still kind of. still kind of the same results. So I don't think that it's the daily risk management either. Although it does seem like it maybe could help. Well, you might have done okay at 48.25. You might have gotten, I don't know, did you take your profit on that one or not, I guess? Ouch. I can see the spot, but they're being a little more fickle about it than usual. Okay, Feds Corals is talking, answering questions now. It's being pretty tight today, yeah? Maybe they have to test that downside again. Break that 43. Anyways, to our earlier conversation, the point that I'm getting at is, like, I can't verify it for myself. That's the problem that I have with it. So until I can verify it for myself, in an empirical matter, and one person doing it, or even if I did it, and that's still anecdotal. So. And even more so than that, I think that I would need to understand where the inefficiency comes from. Okay. Oh, no, we gotta bell that one. Yeah. He did. You say you did hold it? Because they did go more than 4 ticks above that entry at one point. Oh, geez. I think I got in at exactly the wrong spot. So here's another example, though. Is that none of that fit your entry criteria? None of that fit your entry criteria. Initial move, they always tend to always says agreed. Yeah. I'm telling you, man. What you got to do is you got to come over and look at the code here, and we change a couple of things and then go through, and then it'll be like, okay, where am I actually doing this? How am I actually doing this? Because from everything that I see, I can't explain it. I know you've made money from doing it because you've shown me statements, but I don't understand how you're doing it. Okay. Well, at the moment, it seems like buyers are trying to dig it out by having a little bit of a hard time. Let's see if they do it this time. See, they kind of get like right there. That does, if you get one works out, milk it for all you can. If it doesn't, get out with a small loss. If you can go in and it doesn't work that way, dude. It just doesn't work that way. Like, you can't come in and say, okay, like if it's gotten 10 ticks in my favor, then that means I want to let it run. It can turn and change back on you at any moment. And similarly, you can be down and that flip on you at any moment. Or it can continue going down at any moment. How do you know? Intuition and experience can't be backtested, right? But like it's intuition and experience can also just be random. That one was a dismal failure too. Looks to me like they are pretty that the downside here seems to have more of an advantage than I might realize. It's magic. I have to say the edge that I've been using in my discretionary trading, I definitely think I've found something. It's still one of those things where it's like you have to have the daily filter out, right? if you really have a good idea of whether it's going to be an up day or a down day, then it's great. But if you don't, then like we do now, you'll not do so well. So I tried to buy it a bunch of times and it didn't work out. But you can also see on this chart how it's like the buyers just barely get to the spot where it seems like it's going to turn up for them, and then it collapses. I don't know. One of the things that perplexes me the most in markets is that the people that I've been able to verify make money, it seems that they themselves don't really understand how. That or they're just not telling you. How mad would you be if there was an indicator that was using that they didn't tell you about? I mean, I wouldn't be very mad. I would be like, aha, I knew it. But that's if you're using, I know that you've been using other stuff more recently, right? That's something else. But we're talking about your original entry criteria, right? Because that earlier stuff worked. No. You know, they got some downside there, but now they're trying to pull it back out again. He says, "Yeah, but it worked." Well, I can't prove it. Explain to me. If I go and I write up a strategy and backtest it, why doesn't that work? Maybe you suck at coding. Well, maybe the yeah. Hold on a second. Maybe what I coded is not actually how you traded it. That's why that's why it's like you got to come over and I can show you. Well, I mean, we can do it over stream too, but I can show you like, okay, here's where it's taking it. This is how it's doing it. What is wrong? Because I think that if I showed you that you would say that, yeah, that is where it's supposed to take it. Let's face it, you can't code all my FOMO trades. Yeah, but then that's the other thing that irks me is that the FOMO trades seem to work out a lot too. And it's like, how is he doing that? Because you're doing a FOMO trade, those should be less likely to work. So they got some good downside there. Take it off now. Oh, did Brandon got a good short there on that one? Good deal. The 2Js are doing okay today too. That's interesting. Gabby did not. Gabby probably tried buying it, huh? Like I did. Yep. Which is why I worry that coin toss would work as well. Well, it wouldn't. Like that's a it does seem to me that the entries are almost random, and that it's how managing the winners that seems to matter. But if I go back and I code something to kind of like have a moving take profit stop, that doesn't seem to work. So, pretty deep pullback there. I mean, I'm not really very good at sitting and watching it. If you want to show me what it is and I can automate it or have something to see, look at it afterwards, and we can test it that way. But just somebody telling me what they are isn't really particularly useful for me when I'm trying, because I really need to be my eyes over here. So some interesting trade here at 39.42. Jim Kramer asks, is infrastructure needed? Hard call. We know the country needs it, but can the country afford it? Jeez. Now I'm chasing. So I'm kind of keeping an eye out here for like who we have like large meta orders coming through. And I'm not sure that we are. Some of this action does look a little random to me. Consolidation week at the top of the market. Well, there's still going to be some how do we say there's still going to be some end of month flows, but I suspect that might be a more significant factor tomorrow than it is today. Also, one thing that we should note is that there is some dollar strength coming in here for some reason. The 6J is just getting decimated. the euro as well, but not nearly as hard as the 6J is. We are going to get consumer confidence here in a minute. Should also consider the whole Europeans have been kind of more selly, and then later in the session it buys. That's another thing that we should probably factor in. There's been selling on the open, and then they dig it out of the dip, and it's, you know, all buying after that the rest of the day. They've done that several times. Cumulative delta wise, is kind of suggesting that this last 5 minutes of upside is significant and could outweigh the selling on the open. Okay, so consumer confidence is coming out, and we're getting a little bit of volatility. 109.7 versus an estimated 96.9, so that was a good number. In fact, I'd say that's a really bullish number. Some Democrats want recurring checks in the infrastructure plan. Good grief. It's just never going to end, is it, man? Like, the Donald Trump putting the checks in his stimulus may end up being a really key turning point when none of us realized it in politics. Because ever since then, it's been every plan needs to be giving people money, which you can't continue doing forever. Why not just, give us, don't take the taxes in the first place? See that one right there where Brandon took a short? They shouldn't have done that. I need to fix him. Because that should only be for like a cross below. That's the second time I've seen him do something like that too. Like it should be one where like they shouldn't have been below for the last like X amount of time. Well, we can change that. Do that later. Well, it's interesting that the consumer confidence comes out and now it's just kind of going nowhere here. The cumulative delta kind of flattened out too. Jeez. There's a bit of couple of retail traders chasing it right there. You know, and it's not like these trades haven't been getting some favorable excursion. I would maybe be doing okay if I had brought my targets in today. Ugh. I think doesn't matter. Well, yeah, it does kind of matter because I'm kind of wondering where the issues are. I think that if I brought in targets, I would be doing better, but I don't think that that's the solution in this particular case. So I'm past my limit now. So I'm gonna trade on a different account. Sure does look like a long still to me. I don't know what the deal is with that. Consumer confidence was good. See, like the trend is down, but it's not going down like you would think that it would if that's what's going on. I'd also say I'm getting a little bit too easy of a fill on some of these. There is some aggressive order flow there in that area. You really need to stop talking about that. Talking like that. Like, oh, you should have followed my, like, we cannot prove that what you're doing works or that anybody else will be able to duplicate it. So don't try and make everybody do FOMO like they should be trading the way that you do. I have a poster of Ace on a wall. You can comment. You can share your entries. Just don't try and talk other people into changing their strategies. This kind of, it just seems manipulative to me. Well, this thing sure does look like is gonna flip up to the upside in the end. Isn't that kind of how it happens all the time, though? Is like you do have it right, but it fiddles around with everybody way longer than you're able to deal with. Bitfinex is tweeting a lot today. Oh, by the way, the treasuries came down hard there. Was that off of the consumer confidence number? Oh, it was. I mean, I was looking at it. I didn't understand why I didn't realize that the treasuries dropped as hard as they did when the consumer confidence was good. But it's interesting that the E-mini didn't really take off. So there must still be some of this margin call selling out there or something. That's why it seems like it's up, but it's constrained. I don't know. It was only a 16 tick. Well, it was it was no, it was more than that. It was a 12-point drop. You all having patience? Well, if you're trading on a shortest time frame, it doesn't matter. You're gonna get stopped out of your trades, right? Either that or you wait too long and then you miss it. You notice how much it bothers me when people say something that's like, it's so simple, guys. All you got to do is be patient, and then all your trades will work out. No. Are you kidding me, guys? We're all staring into the abyss. You notice, by the way, that you keep getting these stall outs on the long side? It's like when it's going down, it kind of goes down fast and then it bounces. But then when it's going up, it'll go up and it'll kind of go nowhere for a while, go back down, and then it goes back up, maybe higher. So like maybe the overall trend is higher today. I don't know. Like we're still not above the open, so I can't be completely dedicated to the long side. But it is kind of like seems like that the longs are having a tendency to stall out a little bit. Anyways, I'm just tired of the retail trader industry and approach, because I continually see nonsense and platitudes. They don't really help people. It's like, show me something empirical. Show me that a market has a tendency to do a certain thing in a certain situation on a consistent basis. If you can't do that, it's worthless. Well, here's another. They had a really strong upside move there, and the sellers have been able to make progress down here again. They may pull another higher high, and we'll see. So you're gonna go to 38. I have to bail here. It looks, well, no, maybe not. Maybe they can save me. Bulls are losing the bull line. So here's the thing: is the cumulative delta continues to be very positive. What's with that? Archegios more like Archaos more like. Says zero hedge. Hmm. Yeah. I'm resigning myself to I don't know what's going on and going to the market making strategy. If they really decide to go to the downside, there's still quite a bit of potential downside in this move, so. Okay. Hmm. Oh, now that's interesting. So did Brandon take that short earlier and it didn't work out for him and now it's going to go short again? Oh, no, they've just gotten, yeah. No, it is. 3 shorts and one of them didn't work. Oh, 2 of them didn't work. But then there's one, it's in one right now. That is interesting. And the Jays are doing okay today too, which is weird. I've never had the Jays come straight up profitable out on a day like that. I wouldn't expect them to. But then Gabby is down 1. That's kind of unusual. Okay, there is a pretty solid amount of volume coming through down here in the 35 area. Looks like they did break it for a new low, at least temporarily. Let's come and look at our VIX estimates. Oh, they're so not even close. Downside target would be 39.21, which matches up with about, well, it's not even that. And downside stops are at 31 at the moment. There could be way more downside available in this. And we also got like lows. There's yesterday's low, which was at 39.32. I can see Ether 8 are pointing out. There was also like the overnight low at 39.28, which might be more important, but. Hmm. Hmm. They printed 1,000 at 39.39 and 3/4 or 39.40 ish. Ah. That one interesting that Brandon caught it so quickly too, by the way. Your cumulative delta is working more like RSI today, it seems. Well, the thing is that kind of like I highlighted in the morning, you were getting this weird situation where the E-mini isn't really following the cumulative delta very well. It would be really hard to call. Oh, Ace is taking his ball and going home. Did I hurt his feelings? Oh, I wasn't saying that it was annoying. Do you understand the thing that you were doing that I was discouraging. Because it's not calling out the trades. The thing that I'm cautioning against is going and saying, okay, I took a trade. Hey, look, that one worked out. Why didn't you guys all take it? That's not the kind of that's like trying to get other people to FOMO and follow your trades. That's not what we're about. Sure, I'm okay. You can just be that way and just not say anything too if you really want. This move up looks like it's losing steam. Well, I'm not picking the spots where it's turning very well either way, right? I'm able to catch some momentum on them, but then I'm not able to get. Nope. I'm able to get some that go quite a bit my way. 24 ticks my way, but not a real true runner the way that you would think it would. And this is reversing super hard too. Now they haven't gotten above the open yet. I have to say, for the downside, they could have gone so much worse. And look, so see, this seller is still there, man. That's weird. This is recovered. Well, it depends on which VWAP you're using. I tell you what, if there's anything I've backtested more on order flow, it's the VWAP. And I'm not going to say there's nothing to it, but it doesn't really. I hear so many things about the VWAP that the way that people describe it is kind of useless. You will actually make more money from trading against the VWAP and looking for the cross of it and taking it as it crosses it, looking for it to run, than you do off of the bounce. But you have too deep of a drawdown when you do that. And I'm doing this. I'm just gonna let it continue to put my orders out there, but I'm not gonna. Bank traders are using a current open-based VWAP? No. So they used to, but that's old stuff now. I need to make a video about that because, yeah, when was it? 2000? 2000, basically, there was a study that came out by Algram and Chris about efficient execution, that they provided a better execution than VWAP or TWAP. And so while I'm sure that there are still a lot of people that do use VWAP, like if you were working for like the Goldman Sachs or JP Morgan or like the top equity execution houses, they don't really use that anymore, to my understanding. Oh, there we go. Do you have the exact title of that paper? If you search for Almgren and Chris, you will almost certainly find it because it is probably the most cited paper in finance. There you go. Optimal execution of portfolio transactions. I said 2000. It was 1999. There's the paper. So I think the thing that's interesting about it is that they were all used VWAP. And then I think that there was, everybody realized that they used VWAP. And so I think that the day traders started gaming it the way that day traders try and game it now. And so they were finding that their execution wasn't really that optimal for them to make the money the way they wanted to. And then Almgren and Chris came along. And so they started this different way of doing optimal execution that was based. Almgren and Chris, they don't necessarily show you how the order book plays into it, but later other studies kind of showed how the order book makes that the most efficient way to execute. And Almgren in particular, he went and started an algo trading firm off of it. And he has said that they don't really use that anymore. So, which kind of suggests that people started taking advantage of Almgren and Chris, and that there are even more effective ways of getting efficient execution now that aren't public. You know what I mean? That's kind of weird, right? But when you read that paper and you look at it, the way that they suggest that they do it and everything, pretty solid stuff that you could use. But it's also what you'll realize when you look at it is that it's something that is you're not going to write a technical indicator that's going to help you do it, right? Because it's kind of spaced out in a way that it's not going to show up. I don't know if that makes sense. It's like they're executing it based off of a time schedule instead. Yeah, it's like military tech. What makes its way to public markets is 10 years behind what the military had on its shelf. Well, I think it's in the retail trading space. It's way worse than that, though. It's like retail traders are using trading strategies and information that's like 40, 50 years old. Right? Like, think about what the majority of retail traders use. Like the most popular indicator that I see out there among retail traders, especially on TikTok, RSI. RSI was invented in 1969. Right? And you can kind of sit there and think about it and be like, okay, like here's this indicator, a way of looking at markets. It's been around for over 40 years. What are the chances that it still works? Because this whole idea that people have in their head that like you find something and it works and it just works forever is just ridiculous. Now, there could be a property of the markets that's persistent and somebody could make money off of it, but you're not going to make money off of it because somebody else is going to be faster. There's going to be an established player in the space already taking advantage of it. That's what I'm finding with a lot of the edges that I've been testing lately. So it really is taking advantage of a real inefficiency in the market, but you can't really make money off of it because there are too much competition. Candlesticks are 400 years old. What's wrong with that? Well, so have you backtested candlesticks? Like, the backtesting candlestick patterns is really interesting. Man, it comes to selling again. They got to the open at least. Didn't they? No, wait. 49.25. Okay, yeah. They did get to the open. Candlesticks. 400 years old. What's wrong with that, Seth? Lots of chance. Price is coming back through the VWAP, yes. So how does that help, do you think? In my mind, if we got a line in the sand that we think matters, and then it goes to that line and wraps around it a bunch of times, that's like, okay, this particular thing is maybe not very useful right now. Oh, it might be the long bounce. Well, we'll see. The issue that I'm having right now is that my read of the meta orders suggests that we should be going much higher. But there's certainly something selling out there, even though the majority of the volume is long. And there's the whole thing with there's the whole thing with how options play into all this. Just spitballing tea leaves at this point. I get you. I hear you. That's fine. I guess I misunderstood what you were trying to say. I'm a little frustrated today, right? The thing that irks me is that I did so well yesterday, and it feels like today is a similar situation, but I'm not catching them as well as I did yesterday. I guess yesterday I was just taking ones, and when it went 16 ticks, I took it. So there was at least 1, 2, 3 trades that did that, but there was plenty of trades that I lost on as well. So I think in the overall, that was just having the overall daily direction wrong. Market always takes what it gives you. Well, I'm up quite a bit. If you look at this, so these are all sims, but if you go back a week, we're still up like something like 2,000. But I don't know, man. Ooh, look at that. I think I want to let that run a little bit with the way that they chomped at the bit from that one. So when I look at it, we had a down move. On the down move, the cumulative delta was positive, and then we had an up move, and the cumulative delta was positive, and they moved even more than when it was on the down move. So if I'm to game that out into two large meta orders going opposite ways, then the end result should probably be that we're going to go to 39.55 or so on the other side. That's the way that I'm reading it. But this is kind of a bizarre setup from what it usually is, because the cumulative delta on the down move was positive. So, I don't know, man. Yeah, I think the bigger thing, though, for me today is Brandon. We identified a situation where Brandon will try a short when it shouldn't, so we should filter that out. And that could help him a lot. Looks like a head and shoulders. Well, I don't know if I care about that. So you're saying that it's like an inverse head and shoulders. This certainly does look like that kind of a pattern, doesn't it? Although I think that you would have to get to above the pre-market. Oh, actually, we're on there. Yeah. So here at 39.50, you could say it's an inverse head and shoulders and reverse higher. But I'm not really seeing the acceleration. I guess it's not bad, but You know what's when I'm looking here, like if I were to sit down and say, what is something I can look at that would be an indication that I would get this kind of behavior and would maybe explain why it's being so rough? It definitely would be that the R squared, or the degree of autocorrelation on a 1 minute chart, is very low at the moment. We've seen a lot of days where you get really strong trend in one direction. And it's not doing that so much today. So is this just because of the Archegios thing, or is this a harbinger of market action to come? If it is, I think that I would need to bring things in a little bit tighter and be going for 2 points instead of 4. So the 4-hour guys are driving price more than the 1 minute guys? Oh, well. When we're looking at volume, how do you place it as different time frames? So I did a lot of research on time frame possibilities, and there was some interesting stuff in there, but the only thing that I found that really seemed to have any real predictive quality was whether or not we were above the regular and extended session opens. Now we're above the regular session open. I can feel a little bit more confident in my longs. I'm not getting like significant absorption in this 50 area. It's just kind of lackadaisical at the moment, actually. So it kind of suggests to me that there's a lack of latent liquidity in this 51 area and that we might skip through it when somebody decides to press. Where is my stop loss? I don't have one. I am positive on the day now at this point, by the way. So I'm gonna let it skip up through here again. There it is. Okay, so we'll leave one on. Okay, so there you go. All right, so where should we put our stop? All right. Who is this? Vinny Investidor? Okay. So my stop is at 3906. Come get me. Fucking ridiculous, dude. You come and get me at 3906. What time is it? 8:50? So I need to be here on... Gonna try and do some measurements here. So if this is truly a buy-side meta order, we could go up to 39.60. And if I come over here on fixed targets on the day, they've got 39.73 above us. Although we may underperform that. 39.60 is the overnight area. Yeah, 60 to 65 seems like a good upside possibility. Okay. I'm going to take it off here. So I was finally able to get a runner that cleaned things out, but still pretty frustrated with today. The lows had extreme cumulative delta. Dude, the lows, it was weird what they did at the lows, I'll tell you that much. It looks to me, though, like sellers are still here. So, but because I'm getting that slip, I'm out. They turn on Tesla at lows too, really? Well, should we come and look at some stocks while you're mentioning that? Sellers are still here. Well, I don't know. So this last bar, a lot of cumulative delta short has come into the futures, but overall on the session, it seems like there's more buying in the futures than selling. But that was even when it was moving down. So there's a lot going on in a lot of different markets, and we can't necessarily see it all in the futures like we normally would be able to, right? Then they save it with aggressive programs. Oh, so let's see, what are you saying here on Tesla? TSLA. Oh, wow. Okay, so that might explain some of the action that we've had, was that some of this large meta order might have been coming into Tesla. Oh, I don't know about that one, man. Like, that immediately makes me think of Cathie Woods having changed their prospectus and like, are they going to buy more Tesla? Because if they are, I say just let them buy it all, and then when they're done and they're leveraged up as much as they can, then kill it. You know? We got to have more here going on. Let's see here. Yeah, silver doing pretty awful today. ARK is up, though. Tesla's up. Volkswagen up really good. GameStop still handling things rocket. Not bad. Apple down 1.63. Amazon down 0.88. Palantir down. Sumo Logic down. Gosh dang it, Sumo Logic. So where are they at on that? Oh, geez. That's ugly. Well, I might be able to get to a point where I can just buy more of that. Yeah. Probably a little bit more, though. Because they seem to be following the small caps and the techs. And I'm not sure if that is done. They might have way more to go. Isn't that crazy that at one point they were up at 45 and now all of a sudden... So in February they were up at 45 and now all of a sudden they're back to 17. Which is close to an... Oh, actually it is an all-time low for them. And it seems like it's just a little bit every day too. Oops. Oh, MSTR has kind of gone flat too. That's interesting. Maybe it's all about the Bitcoins, right? Maybe we just got to wait for Bitcoin to drop below 5,000 and then we'll get the real market chaos and all those techs will get destroyed. And that's not good. Baidu saved itself today was stronger than American. Well, all of those really over those ones that were really hit by the Archegios are like doing stock buybacks and stuff. Do you trade NQ? No, don't. Wouldn't recommend it. Do you think it's possible to use an indicator? What the hell are you talking about? To reverse way to predict how much drawdown percentage of stock might reach from a point of entry? Not sure what you're saying or how you would do that, but I've never seen any indicator that suggests that anything like that happens or would be useful. Options are the best way to eyeball markets projection. I agree with that. I've seen empirical evidence that suggest that using the VIX to project possible targets is somewhat effective. Yes. And we have a video about that called using VIX range projections or something like that. Good morning. Had to stop trading for now. I'm seeing big ass sweeps with volume that are fucking with some of my trades. I am seeing the same, Lucas. So I hit my risk limit and switched over to Sim and used the market making strategy and doubling down to erase that loss. And then I sized back down and I've taken another single here. Look into implied versus volatility versus H. What would H be? What would H stand for? But yeah, I did an empirical study about using the VIX and the open of the S&P 500 to predict the range for the day, and then comparing the expected volatility to the realized volatility, or rather implied versus realized, on the range. Then it was interesting. There was definitely skewness and tails to it. But overall, the big takeaway that I got from it was that if the VIX are pricing a certain amount, you can pretty well bet that there's at least you will get a certain percentage of that. So it can like underperform it, but it can't underperform it by too much, or it hasn't at least. I am too interested in your strategy. Are the bots using it? No. So the bots are using something different. So check out the bots today. They're just really weird shit. So I've got these two guys, J and J2, that are kind of competing with each other. Usually J2 is better, but usually they're both down. But today, J has done quite well. The J1 has done quite well. So I'm unsure if I should, which one of these two I should actually use. I do think this one takes less trades. Let's look. Strategy performance real time. J took 18 trades. J2 took 10. Yeah, so it takes about spot 6% of the trades that the other one does. Ace trades highbrow was nothing too worrying. I'm managing my losses well today. Oh, good. There you go. Good job. Sometimes you make money by not losing money. Yeah, for sure. 18 trades just since the morning. So it's taking something on a one range chart, and it's basically using delta percentage metric to reverse the action. So yeah, it's like a scalper. I wouldn't call it a market making robot, but so the whole thing was I went and I did the back test, and I did like the full thing, like everything as perfectly as you could possibly get it, right? One tick, data series underneath, all of that stuff, okay? When you do the back test, even equal risk reward on the back test works really well. I was setting it up because these guys were set up to just take on risk and try and make money by taking on risk, okay? Right now they're using equal risk reward though. So, yeah, I do that. And then I go, okay, this looks great. So then I go in and I start running it on sim, and it almost always gets a fill one tick worse than what the back test does. Can you believe that? So it's like the amount of time that it takes to calculate it or something, it doesn't get the price that it wants. I don't know. I don't get it what the deal is, but there's some issue there. So then I said, well, okay, that's okay, because when you just factor in the slippage, it's okay, and we could still potentially make money from it by taking on the risk. So then I got into, okay, so let's try to use, let's cut this one off. It should, we got a really good excursion and then it didn't go. So, can you explain the wash sale rule too? Oh man, no, because this is not something that we ever deal with in futures. All right. So the whole thing is, my recollection of it is you do a wash sell when you're in a losing position and you bail on it, and then you go out and you buy it back lower, or you buy something similar again. And if you buy it within 30 days, then they say that you can't deduct it, because you just took the loss just to make it show up on your taxes, and then so you're going to take a deduction, but then you're still going to have a position on, and you just haven't gotten out of that position, and that's why they have the rule. But I don't completely understand it all. It's not something that I've dealt with. Have you considered having your robot and NQ? I'm sure you can work out some nice strategies. If your robots love to scalp, they can scalp a ton on NQ. Yeah, probably. We could try running it on NQ, I guess. Should work. But anyways, the whole thing with that was this. I wanted to say, okay, if I start adding level 2 stuff to it, how much better can we make it with level 2? Because it's this is something that takes a lot of trades. We should be able to get a lot of data. So let's just, try different level 2 things on it. And as I've gone through and I've done experiments, I've had some issues because I want to sit here and run 10 different versions of it, but my machine can't handle that. So then I went back and I said, okay, let's just run 2. Let's use J and J2. And J and J2, the difference is that J2 has a directional filter on it. So most of the time, J2 does better. But most of the time with equal risk reward, they are down on the day because of the slippage. But then today, J2 is down by quite a bit and J made quite a bit. So now I'm not sure what I want to do. Maybe I should just keep, it does seem to me like J just takes, well, there can be some differences between them, but generally J is just going to take more trades than J2. So maybe off of that alone, we should just go with J and do the level 2 filters on J. And then once we've gone through that and we feel confident about our level 2 strategy, we can flip back to it. But I'm also concerned that the level 2 optimization is just going to be a wash, because it seems like there are periods where the imbalance between buyers and sellers on the level 2 matters, and sometimes it doesn't. So yeah, I would need more complicated rules, and I'm not sure how to suss that all out. Now, I could go back and make the market making strategy. I'm not sure how to program that because I know how to do it by hand and I know the models, but if I use the model, I don't think that it will make money. So I don't know how I do it that's different. You know what I mean? Wow, now I find out that they don't let you count the losses towards taxes. Yeah, if you got into something else, yeah. Now the thing though is that if you got all in, do you trade your market making strategies in front of an audience? Yes. So if you just rewind on this video and go back a little bit earlier, you can see when I did it. I limit myself to 10 contracts on the micro, and I don't want to go into too much detail about how I do it, but I kind of am looking for the same sort of spots that I look for on singles, but I take smaller targets and try to, catch the amount, and then when it gets really volatile, I just increase that spread, and I will cancel things based off of when I get strong volume coming in a certain direction and to account for that. But it seems to me that if you do a market making strategy with multiple contracts, when did you do it? So I started doing it around, when do we do this? When you're watching the video again, the clock will be around 8 o'clock. So after 8:15, it was when I started using that. 8:08 to be particular. So I took one and scratched it, took another one and scratched it. Both of those actually made quite a bit, but I wasn't able to bank in a whole lot of profits on them. And then I had another one where I did bank in the profits and made it up. But anyways, what was I going to say? It seems to me that if you do a market making strategy like that, that your ability to decide which direction you want to take it, to say, I think today is an up day or a down day, and trade it based off of that alone can get you profitable. But the issue is getting the fills if I were to automate it, I think. And you are likely to have a bad drawdown at some point. So, I don't know. Have you seen the recent Ninja webinar? I heard people talking about that. Is that the one where it kind of draws the little fuzzy thing behind it, and they say that it's order flow based, but they don't really tell you anything about it? Market making is non-directional, so why would you want to trade from up or down day concepts? Yeah, so here's the thing, is that a traditional market maker back in the old days, right? They have to just put out a bid or offer, and they can choose how many contracts they want to bid or offer, and they can choose the price that they can bid or offer, but they have to have a bid and an offer. And so the big disadvantage to those traders, the thing that they had to deal with that was very difficult for them, was that you could get a big push coming in, and they push against you, and you don't pull your orders. So now all of a sudden you've had this big move down, and you're long a bunch of contracts. And what do? You just puke right there, or you try and work it out, right? Well, so that's the big disadvantage for them. Okay. But if you know or have a pretty good inkling about which direction it's actually going to go, you don't have to deal with that problem. And you end up with it, when you really get the good excursion, it's going in your favor rather than going against you. Then that's where, you can make good money from doing it. But there's still this issue that even though that will work out most of the time, you will end up in some situations where you will be close to your maximum risk that you can take on, and you get the move against you, right? So you will still get, you could still have drawdowns that are probably going to destroy your account. ZM, who cares? What is that? No, wait. That is, that's Zoom, right? Yes. This is a stock. Don't really care. HF says, I've seen the same kind of indicator in one of your videos, the one where you speak about trading platforms. Oh, okay. Maybe you're talking about the Vista. Yeah, I wouldn't worry about the tax so much. But I mean, the tax isn't going to be your biggest issue, right? and I'm pretty sure that if at the end of the year you do end up losing money overall, that you do get to deduct that overall in the end. So let's see here. Where were we? Oh, okay. So we had that really fast down move, and I got out. And since then, it's kind of come back up, but it still wouldn't have taken out that target. So. What are you saying? Nowadays they hedge with options either in the same instrument or something of similar beta, don't they? Well, there's different ways of doing things, right? So when I talk about a market making strategy, I'm talking about something that basically is purely trying to utilize the liquidity to make what would be about the spread of the instrument are better. The whole thing is kind of like when it moves against you, you want to be able to like at least break even. So that's one thing that I've kind of changed lately that that seems to help, is if you are the wrong way, you know, like you say, I want to know what the daily direction is. And you're wrong, and then you're trying to make it back. There's often the temptation, like you make it back and then it's like, okay, cool. Like now I can push it and get even more. You probably shouldn't do that. You should probably just break even, pay for your commissions, and then be done. If you really, really got it wrong. Oh, so your idea of is trading within the 1S. Well, it's not even that. The locations that I choose to buy and sell at are based on how much latent liquidity I believe there is in that location. Which is kind of hard to tell because you have to go and watch and see how many contracts trade in that spot and how it deals with it. But you can see here, just as an example, 39.50, large absorption in that area. So that's not necessarily where I would want to get in. If anything, I would be looking to like take my profits there. Because what I would like to see is an area of, you know, let's just say that the volume profile indicates where there's latent liquidity and where there's not. It doesn't, but it can sometimes. If we're going to say, I think that we're moving up, and I think that there's a lack of liquidity there at 39.47 and a quarter, but I know that there's decent liquidity through this area, then probably what I want to do is want to buy it somewhere around 39.45, because I know we can get to the high end of that. And then if they do go through the area where there's low liquidity, they're likely to, if somebody pushes it, it's likely to slip right through it. But how you tell that is the secret. I saw your 808 trade. It looked like you were yeah, it's like campaigning. That's exactly it. Yeah. So like, because you're using so many contracts, I can then go in and say, okay, I'll take a point, I'll take a point. It comes up a little bit. I'll take a bunch of it off. And then you kind of have so much profit built in that you can kind of just not worry about it. So yeah, that is a big part of what it is. It's a nice strategy and very powerful, and also a nasty way to hedge longer trades. You know, I need to go and read that book where that term came from, because I want to know what they say about managing the trades and everything. Because I mean, the issue you get here is still that you'll get this thing where it's like you're in a position, and say you don't want to ever have more than 10 contracts on. And then all of a sudden there's a 16 tick move against you and you have to puke it all, right? And are you actually making enough on your winners consistently to deal with that drawdown and stuff? That's where the issue for that comes in. I do campaign a little bit with 2 or 3 contracts a lot these days too. But you know, when you come back and look at my stats for March, let's look at my stats for March. So just to be clear, most of what you're going to see here is simulated trades. It is not indicative of performance. It is not indicative of what you might get or won't get or anything of the sort. I'm just using it as an example description. So we have to filter it to MES because we had that bad E-mini or treasury loss the other day. So if we come back to March. Okay. So if you come back to March, you can see that it only had like one day that was really very bad. Okay. So like on a daily basis, not bad. But when you come down into the stats, you'll kind of start to, that's not what I wanted. Where is it? Show stats. There we go. Okay. When you come into the stats, you will start to see a couple of like, let's see here. So the favorable excursion is more than the adverse excursion, and the profit factor is positive. The win rate is okay. 40%. This is down a little bit from yesterday. But I think somewhere in here, where is the... Oh, okay. So one here is that I've had a streak of 8 losers in a row at one point. That's actually pretty good. I haven't had like a really terrible day in a long time. Today was turning into a really terrible day, and then I in my opinion, when like I go to the market making, that's like it's cheating. Because I was trading more contracts than I'd be comfortable trading with on my account, right? But I digress. I don't think I would trade that way on my account, even if I had the money to. I think you should also see in here. Oh, there you go. Well, okay. My largest winning trade was 985, and my largest losing trade was 222. But if you were to look at that in terms of like a favorable excursion, the maximum adverse excursion would be higher than the maximum favorable excursion, I'm pretty sure. So anyways, I wouldn't consider these to be what's the word that I'm looking for? You get really, really careful when you're showing results, right? So I'm not saying that this is indicative of what you would get, but oh, max drawdown was 612. That's no good. Have you tried placing a shorter leashed stop loss? So like you get this thing where it's like here where it gets hard is that it seems to me that when you're doing poorly, that it's probably best to scale back. Bring your targets in, trade less contracts, wait until you've gotten back into your groove and you're doing well, right? So you kind of get these issues. So one is that if the stop and the target are too small, then your trade starts to just become noise, right? Like for me, if I push it through, if it goes 16 ticks, then I know that I got a real move and then I saw something. But if I just take 4 ticks, it's just noise. And so it's just as likely to go and hit my stop in that instance. And so there's like a minimum amount that it should be moving for the edge to work, you know? Or to be put another way, you could go back and backtest it and you'd find that if you need your stop and your target to be far enough away for it to actually start making money in the backtest, right? So that's one issue that I've had. The other issue is that your losers are going to end up being bigger than your winners in the end when you do that, right? Because you took a big loss and you lost $100 on a trade or something, and then you scale back and you're only making $10 on a trade again, that's going to take a long time to recover. If your risk reward doesn't fit your win percentage, you could be at a negative profit factor over time. Yeah. And what I'm saying is that if you bring your stops and your targets in, it could potentially change your win rate. I feel like I'm just going to give up on investing altogether. The system is too rigged to make it clear everyone is a snake that wants to see you lose. That's what. Well, sure. Well, I mean, it's not that everybody's a snake that wants you to lose, but everybody's a competitor. But there's other issues with wash sales. I think it's more complicated than that. Yeah, but here's the other thing is that like with the wash sale thing is that the capital loss is negated and instead applied to the cost basis of the newly purchased stock price. So if you purchase it again and you still lose money on that, then you still deduct that. Right. This is something that's only going to matter if you bought it back again and made way more on that winner. And then on that winner, you would still be taxed on the overall profit, right? And you'd be taxed at your regular income rate. Every system out there is rigged in a way so you feel that's just life. Nothing is designed for you to succeed. You need to fight for it. Orman says if you have a strategy with a 65% win ratio, once you reverse your position, then you will recover your losses and gain more on the trade. But most traders don't do that. They just put the stop loss and get out. Yeah. If you have a strategy that's actually hitting here a 65% win ratio and isn't doing so by just taking on excessive risk, something that actually has, gives you a percentage edge. But you're probably thinking, oh, you just need to have your stop further away than your target. Then reverse and take the other side and cancel it. No, that doesn't work. You still end up with the situation where you just take the big loss and it's too big. How many out? There's it seems like every week. Just seems like every week I get this thing where you see these people that they're consistently making money and then they blow up. There's a bit. That's a long time. Saying on Wall Street, watch the person that is consistent because they're the next person to blow up. You need to change your stop for a double down order. It will come back. Yeah, but then when you end up in your stop being exactly where it reverses. I have a friend who has a 95% win rate, but if he takes a loss, it takes about a week. He is taking on a lot of risk, probably. Oh, you're joking. Oh, okay. Yeah, I gotcha. Yeah, Martin Gailing is so. Let me back up, because when you look at my market making strategy, there is kind of some Martin Gailing to it. Okay. Because I don't have like a set stops when I'm doing that. I'm basing when I get out based on the liquidity and having too strong of a move against me for me to want to try and work my way out of it, right? So it is kind of Martin Gailing in a sense, but there is an actual real mathematical edge there in it, in that you're going to be able to make it back to break even, mathematically speaking. But even with all of that, you are still going to have a situation where you'll have a bad day and you'll take the loss. You'll hit the last limit and blow out, every once in a while. But the amount that I make on a good day compared to the amount that you lose on a bad day, they all work out. And so you'll continually make money, and you don't have this situation where it's like it takes forever for you to recover. Like the time to recover is really high, right? But you've just got to realize that when you're talking about strategies like that, where the time to recover is really high, or the average loser is larger than the average winner, and that sort of a thing, that person might believe that they have like some sort of predictive edge about where the market is going. But the main reason, if they're making money, the main reason that they're making money is because they're taking on excessive risk. And if they're not able to manage that excessive risk when it's on the downside by just not straight up not trading, then they're going to blow out. And that's why you see these guys so consistently blow out. Isn't that just a function of time and everyone is right in a bull market? Well, I've been wondering, why have I been doing so well lately? Is it just because it's a bull market? Kind of that's my leading theory right now. Because today was difficult, right? Ideally, you want days where you make money and days where you don't trade, but realistically, your worst days can't be days where it takes a single week to recover. You need to recover your losses on a single, yeah. So I've been trying to do it where I will keep my risk really low. If I'm really feel confident, I will add to it or whatever. And then, if I make 50, I stop. If I lose 50, I stop. It looks to me, though, that even though it seems to have really, really good periods, I will still get these bender moves where it's like I'm wrong over and over and over and over again for no apparent reason. And until I can figure out how to deal with that, I don't feel comfortable trading the live account. It's like getting a mortgage, then leasing that house and paying back the repayments while making a profit. This is a carry trade. Yeah. I do a 1 to 5. Does that mean that your stop is 5 times your winner? Because that's really crazy. Like, this is where it's like, go and backtest it, man. Because you can go and backtest some of those systems, and yeah, it'll like show a win or something. But when you see what the drawdowns are on it, you would be like, oh, hell no. Oh, the other way around. My winner is 5 times my loser. Okay. I would just represent it as a decimal number. Average winner divided by average loser, and I call that R factor. What is your R factor? Your R factor is 5. That's awesome. What is your win rate on that R factor? I was able to get one back test that had an R factor of 5, and I think it was giving me a win rate of 30%, and that looked amazing. But I think there was a problem with that back test. Okay, well, it's about time for me to get going, by the way. Let's check the market makers here. Yeah, it's still the same. J made money, J2 did not. That's interesting. Brandon did make some money today in the end, even though he made some mistakes, but that means that it could have been better, really. Could have been better. Disappointed in Gabby today, but that's okay. She's still doing fine. You survived a trade tomorrow, so cheers. I don't know. The reason why I'm being the way that I am is that, yes, I went down 50. I switched accounts. I switched to the other strategy and made it back. It's all fine. Like, I should consider that as success, but I need to figure out why I'll run into the situation where I get 5 in a row losers. I've got to work that out. And because I'm not figuring out what to do in that situation, I don't feel like I'm any closer. Okay, so I am going to peace out. What should we go today? Today is a excessively choppy session. Excessive chop. I don't know if there's any great headline to use or anything. My personal account is a 15% win ratio. So with a 5-to-1, you could make that work, but it's... Yeah. That's where it's like, if you really can find a percentage, like a win rate advantage, so even, let's say it's 50-50, or equal risk reward. Let's say that your R is 1, and then you get like a 51% win ratio. You can kind of make money from that, but like that's kind of random, and it might not be consistent or stick around, and commissions and things like that will be a big problem to you, right? But if you can do a 5-to-1 risk reward ratio, and you can get your win rate to be like 16% instead of 15%, all of a sudden that's like amazing, right? So 1% chance more on a really high R factor trade means so much more, right? So that's the kind of the advantage on going to the higher end of the scale. But the issue is finding an actual percentage edge, because what most people do is they just, they'll say, oh, I have an 85% edge, but I'm taking like losers 4 times my winners. And so, but they don't actually have an edge. And you go and you backtest their setup, and it's random. It might as well be random. They might as well be flipping a coin, right? Okay. Stay prof. I'm just going to say that today was excessive chop. I don't know what else to say about today. Okay, I will catch you guys later. In the meantime, stay profitable, friends.